Welcome to Skytech-Lens. The summer of 2025 began not with cross-border cooperation, but with the shock of a trade war. The Trump administration doubled tariffs on Canadian steel and aluminum to 50%, citing national security. This move shattered decades of economic partnership under the USMCA, threatening thousands of Canadian jobs and the integrated North American supply chain. Ottawa responded swiftly. Prime Minister Mark Carney's government signaled that a proportional response was no longer enough. The new tariffs threatened to unravel the intricate web of factories and suppliers built over generations. The G7 summit in Alberta, meant for unity, became a tense standoff. Carney and Trump set a July 21st deadline for progress or further escalation. Behind the scenes, diplomats scrambled, but compromise seemed distant. The world watched, wondering if the longest undefended border was about to become an economic iron curtain. Canada refused to be a passive victim. Instead, Ottawa unveiled the Steel Firewall, a dynamic tariff system. Announced by Prime Minister Carney, these tariffs would automatically adjust based on the progress of trade talks. If negotiations advanced, tariffs eased. If talks stalled, tariffs tightened. No new legislation required. This unpredictable system forced American exporters to lobby Washington for resolution, turning the pressure back on the U.S. The dynamic tariffs marked a strategic evolution, transforming retaliation from symbolic to substantive. The policy was set to take effect on July 21st, the G7 deadline, as a powerful bargaining chip. Beyond tariffs, the Steel Firewall included strict import controls and new rules for government procurement. Canada made clear it would not become a dumping ground for displaced steel and aluminum. The approach was comprehensive: defend domestic industry, punish U.S. aggression, and close loopholes. Canada's response was now measured, relentless, and designed for real economic impact. A key pillar of Canada's defense was a bold Made-in-Canada procurement policy. Effective June 30th, all federally funded infrastructure, defense, and automotive contracts prioritized domestic steel and aluminum. American firms could only win contracts if their products were made in Canada, incentivizing U.S. investment north of the border. Billions in government spending were rerouted to Canadian companies, providing a lifeline to domestic factories. To prevent circumvention, Canada imposed strict import quotas and advanced material tracking, including chemical analysis to verify origin. Steel imports from countries without a free trade agreement faced a 100% tariff rate quota, benchmarked to 2024 volumes. These measures closed loopholes and ensured foreign steel couldn't be disguised or rerouted. Canada sent a clear message. Its market would be fortified and its rules strictly enforced. Tariffs and procurement rules weren't enough. Canada launched a sweeping financial support strategy. A $10 billion loan facility helped major firms in steel, aluminum, and manufacturing absorb the shock and retool for new markets. Ontario's Tariff Fund offered grants to small and medium businesses to reshore supply chains and reduce foreign dependence. The Build Canada Fund mandated domestic steel and aluminum for all projects, locking in demand for Canadian mills. New funds supported green steel and automotive innovation, positioning Canada for future growth. This marked a shift from free market orthodoxy to a more interventionist, state-guided model. Ottawa was betting it could not only defend its industries but spark a manufacturing renaissance. Canada's bold response drew global attention, admiration, concern, and strategic alignment. The EU, recalling its own trade battles with the US, increased subsidies for green steel and discussed sovereign supply chains. Japan pledged emergency aluminum shipments to Canada, while Germany's Steel Federation praised Canada's robust response. Canada's fight was seen as part of a broader resistance to American protectionism. Washington condemned Canada's measures, threatening WTO action, but U.S. industry groups warned of supply chain chaos and rising costs. Powerful American lobbies called for exemptions and de-escalation. The dispute exposed a growing rift in the Western alliance, the U.S. on one side, a coalition of allies on the other. Canada's dynamic tariffs and procurement rules became a playbook for other middle powers. The US-Canada spat was now a global flashpoint in a shifting world order. The trade war was no longer bilateral, it was a test of economic sovereignty worldwide. The trade war sent shockwaves through North American supply chains. Decades of seamless, tariff-free trade vanished overnight. Parts crossing the border multiple times now faced compounding tariffs, driving up costs. The Bank of Canada warned that 75% of tariff costs could pass through to consumers within 18 months. Prices for everything from cars to canned goods surged, hitting ordinary families. In the US, steel prices spiked, and inflation became a kitchen table issue. Canadian workers in steel and aluminum feared layoffs, but government intervention provided a lifeline. In the US, downstream industries like automotive and aerospace faced layoffs as material costs soared. The US dollar strengthened, complicating trade balances and further pressuring Canadian exports. Central banks flagged trade-driven inflation as a major policy challenge. The initial spark had ignited a fire with unpredictable, far-reaching consequences. Inflation became the trade war's most immediate threat. Central banks faced a dilemma: raise rates and risk recession, or do nothing and let costs spiral. In Canada, aggressive industrial policy aimed to turn crisis into opportunity, reshoring jobs and building resilience. The hope revive manufacturing communities and reduce dependence on U.S. trade. In the U.S., tariffs protected some steel jobs but threatened far more in industries that use steel and aluminum. Automakers and construction firms warned of layoffs and lost competitiveness. The trade war forced both countries to confront the vulnerabilities of economic interdependence. The fallout was real. Jobs, prices, and economic security were all on the line. As summer 2025 unfolds, Canada stands at a crossroads, risk and opportunity intertwined. The steel firewall is more than a reaction, it's a gamble on economic nationalism and self-sufficiency. By investing in domestic manufacturing and diversifying trade, Canada hopes to control its own destiny. But the risks are huge. A prolonged trade war could backfire, unraveling supply chains and raising prices. Canada could isolate itself, deter investment, and stifle innovation. The outcome may depend on global alliances. If the EU, Japan, and others align with Canada, a powerful bloc could emerge. Investments in trade infrastructure and port automation are hedges against U.S. volatility. The world is watching. Will Canada's bold stance create a new playbook for economic survival or become a cautionary tale? As the July 21st deadline nears, the stakes for Canada and the world have never been higher. Subscribe to the channel Skytech-Lens for more updates. Thanks.